Hey everyone, Zishan Sumar here with Royal LePage Signature, and this is your market minute for March 2020. In this video, we're going to do a year-over-year comparison between March 2019 and March 2020. We're going to look at the number of sales, the number of listings, months of inventory, and average price across the GTA, Toronto, and York region. We'll also talk about the impact that COVID-19 has had on our market in the month of March. Let's just jump right into these numbers. We're going to start with the number of sales. In the GTA, we saw a jump of about 11.5%. We went from about 7,200 sales to about 8,000 sales. In Toronto, we saw a jump of about 9%. We went from about 2,500 sales to about almost just under 2,800 sales. And in York region, we saw a huge jump. We went from just under 1,200 sales to just over 1,400 sales, which is actually a 19% increase year over year. Now, here's the interesting thing. Majority of the sales happened within the first 2 weeks. 60% of our sales happened within the first 2 weeks of March. Mid-March, what happened? We know that there was a mandate from the government to practice social distancing, and our city essentially shut down. First 2 weeks of March, we had a growth of 50% year over year in the number of sales, just in the first 2 weeks. What happened in the second 2 weeks is we actually had a decrease. We had 16% less sales than we had in the same time last year. So as soon as the government said, "Hey, everybody, we need to stay at home," our market really went quiet, and with good reason, especially given everything that's going on. The number of listings in the GTA, we saw a 31.5% decrease in the number of listings year over year. So we went from about 15,500 listings all the way down to about 10,600 listings. In Toronto, we saw a 26.3% decrease in the number of listings. We went from about 4,600 to about 3,400 listings. And then in York region, we saw a huge drop. We dropped about 40%. So the number of homes listed for sale between March 2019 and March 2020 dropped 40%, from about 4,000 sales to just under 2,400 listings. Now, you can attribute part of that to the COVID-19 pandemic. A lot of people pulled their listings off MLS once mid-March hit, and again, with good reason. People weren't necessarily thrilled with the idea of having other people walk through their houses. And a lot of people also made the decision not to list entirely. They were thinking about doing it, given it's the spring market, and they said, you know what, better safe than sorry. Let's just wait and see how this plays out. Let's not list our home for sale. So that can explain or partly explain why we've seen such a dramatic dip in the number of listings. Months of inventory. In March 2020, the GTA had 1.33 months of inventory. In March 2019, it was over 2. We were at 2.16. Now, again, if you follow these videos, you know that months of inventory is a key indicator for our market. The lower the number, the tighter the market. A balanced market usually hovers between 4 and 5 months of inventory. If we're over 5 months of inventory, that's more of a buyer's market. If we're less than 4 months of inventory, it's usually more of a seller's market. Across the board right now, we're under 2 months of inventory. So GTA, 1.33 months of inventory. Toronto dropped from 1.8 months of inventory in 2019 to 1.22 months of inventory in 2020. And in York region, surprisingly, the market really tightened up year over year. It went from 3.4 months of inventory down to 1.7 months of inventory in just a short 12 months. So things have really tightened up. And again, this attributes back to the beginning of our video when we talked about the number of sales, the jump in the number of sales. You can see that sales went up, listings went down, and that's why months of inventory has tightened up across the board. What impact has this had on prices? Well, we've seen double-digit price gains across the board for the GTA. So GTA, the average price went up 14.5% from 788,000 to about 902,000. In Toronto, we went from 830,000 to 987,000. That's a 19% increase in prices. And in York region, we went from 915,000 to just over a million. So 1,038,000, which is a 13.5% increase in price. Here's a big red flag. Anytime we see double-digit price growth in our market, it's a warning sign. This is bubble territory. Our market traditionally appreciates at about 7% per year, 6.5%, 7% per year. So when you see things like 14%, or 19%, 13%, that's a red flag for us. So the COVID pandemic has taken a lot of upward pressure off pricing. COVID may have saved us from future issues down the road in terms of our real estate market. Hope this has been helpful for you. If you have any questions, as always, please don't hesitate to let me know. Drop me a comment or call me 416-450-3163. Thank you so much for taking the time to watch this video. I hope that you and your families are safe. Stay inside, stay safe. And again, thank you for watching this video. Have a great day.